Hey, I wanted to share my top picks today for buying a value stock. So we recently went through a round of just updating uh, my spreadsheet of all the value stocks that I'm tracking right now. And so um, here's the list. It's actually ranked right now. You can see I didn't do some of them for this potential by year-end growth. So I'm kind of giving it away right off the bat, but this is my pick. If I had to pick one right now, it would be Disney. Disney seems like it has the highest potential, and we'll go into why I think that. But Number one, I just want to say, when doing this, like the way I'm trying to do it is number one, I'll just look at um, is the stock at a decent buy point for me right now? And so what I'm doing is I'm comparing the current price, which is this column right here, column D, to what I've seen to be a decent time to buy. And you can notice right away that none of these are green. For some reason, green's not on my little chart here on the right, but normally green would indicate that now is a decent time to buy. I realize I kind of did this not too long ago. You can see the last time I updated it was about 5-ish days, 5 to 6 days ago, so about a week. Uh, so you can see what the price is, what just about a week ago I thought a good buy point for this stock would be. And a lot of these are in uptrends, so I want to make that clear. But based on where it is compared to the buy point, none of these are even really close. Disney was the closest one. That's why I have it as orange, that it's close to a buy point for me. I also list out some resistance points. And then as I was looking into this, after going through a complete cycle of all these value stocks, I wanted to see where if I had to buy one right now, where would I imagine this to be at the end of the year? And so, as you can tell, I didn't do it with all of them. I did briefly glance at all these charts. I just felt like Walmart, McDonald's, and Berkshire, the way they're moving right now, they're so high to what I think would be like a peak point for them that even if they do continue to grow and hit the point that I would be considering, it's not that much. It could be more than 3%, but it's probably not that much different. We'll have all of these updated. This potential by year end tracker, we'll kind of keep updating that. And you can see the formula up here in the top of what I'm using. Just so it in that formula, it includes where I think the stock will be at by year end. So we'll be able to kind of follow that along, and then it's just divided by the current price, and that's how this was formulated. Just if you were curious, but so to get into it, number one, we have Disney here. For this one, when I look at my tracker, again, they're currently at 100 right here in like the middle of the screen. I think it's not too unreasonable to think that they could get to 122 by the end of the year. Looking at this chart right now, and even going back into most of last year, I mean, it's hit there before, just recently in August of 22, not too long ago. It seems to have found a bottom. It's now kind of climbing up. So this could continue out for the rest of the year. And that's not even like crazy growth. I don't even have an uptrend in there, but if I did, just kind of, if I did, we can even just draw one in. I'm not going to keep this, but if I did, that would be the bottom of the uptrend. And at year end, we're looking at about 113. Okay. So maybe that's a more reasonable figure. I'll plug it in and let you know what the percentage is. 113. Whoops. 113. With that, it's more like 13%. I'm going to keep my number. I think it's going to outpace this by year end. But and the reason why is because if we zoom out beyond a year, I mean, from 2020 to about mid 22, I mean, this thing was well over $122 a share. And even going back further, there was a range from the fourth month of 2019 to the second month of 2020, and even a little bit back here. Uh, like, this stock is meant to be more than $122. I mean, based on the recap that I remember doing of them, I know they're cutting budget. Uh, they are having some troubles right now. They're they're considering scrapping Hulu, ESPN, um, their whole metaverse type sector of their business. They already cut that, but I don't know. Like, Disney just has something special about them. I just we will keep following this one, but right now I just feel like the potential to get to 122 is not out of the range of like possibility. And I guess I'm putting a lot of weight on like this. I was well over that not too long ago. Uh, Let me know what your thoughts are on where do you think is a good point for this one to, where do you think this one will be trading at the end of the year? Because again, for all we know, this one could just keep going down. I mean, we could technically say that, okay, here's like a downtrend happening. It could keep trending downward till the end of the year, and if we were to take the opposite approach, we could say something like this. We'll make that gold by the end of the year. There's someone might say this could be an $84 stock, and you would want to short this one. I'm trying to think of the more positive approach, but I mean, you can kind of see that anyone could argue either way with these. But I guess I'm saying I'm picking the high side potential. So the low side potential could be 80. What did I say? 84, about 84. Let me know which way you think this will go, the high side or the low side. For these purposes, thinking of a positive outcome for this, 122 seems reasonable. And again, that would just be to this red sell mark or resistance point. I think it has, of all the stocks, it has a decent chance to hit a mark like that. And so, if that's the case, possible 22% return. Next, we have Adobe. That's my second one. I had a potential of 11% return. The number that I put in was 416. So 416 on Adobe is right. I can even just do this horizontal line right about here. So by year end, if we scroll over, by the end of the year, I'm saying right here. We can even vertical line right here, right where the gold bars meet. If we carry this out, they're saying like 429. I'm saying 416. If we zoom out, this is another stock that it's been crazy valued before, all the way up to near 700. We're currently down here. I don't know how long it'll take for them to reach back up to these high points, but well, it has the potential. And because of that potential, I even kind of skewed it back. If we were to do a more optimistic approach, let's say we actually pick that intersection point at 429. If we go up to 429 on Adobe, that's a potential return today of 14%. So it's not, my number was 11%, so that's 14%. That's reasonable. I'm going to keep my number in for now, unless we, a couple months go by and we're still in this uptrend. Then yeah, I'll definitely elevate it. But for right now, just a more cautious number. Uh, no real reason. I just think that's within the realm of possibilities. Again, basing that off of the valuations back here, how it was so high, we saw this drastic downtrend. We seem to now be kind of catching up. We'll continue to watch it, but if I had to pick one today and Disney wasn't available, Adobe. That is what I think is my second pick. Out of these, Exxon is the third one. Exxon for this, currently at 114. I said 124. I thought 124 was a decent number, and I'm going to zoom out just a little bit. So 124 for this. If we kind of do the same approach, 124, I'll make this a vertical line at the end of the year. Horizontal line here, right around like 124. So that's right there. If this continues on the upward trend, it's slightly below. It's slightly below. Hopefully that's not too crazy. Let's make this a little bit more condensed. It's rare that it hits the low. I can tell you that. It's normally up towards this blue line. So if we just extend that one out, and we'll extend the red side out too. Hopefully those are somewhat parallel. Something like that. So really, by the end of the year, if this uptrend continues, I think there's definitely a decent shot that it could get to 139. If it got to 139 instead of my number 124, you'd be looking at 22% return. Exxon actually might be. Exxon is actually my number 2. I'm going to give Exxon number 2. It was Adobe, but I like the 139 figure. Yeah, I like. Okay, so Exxon's 2. I hope that sums this one up. Again, the reason why I'm willing to actually go higher on this one is mainly because of the recent news about the OPEC meeting, how in 2024 the whole energy sector in terms of fossil fuels needs to cut 2.5 million barrels a day in production. That's going to be spread out in a variety of continents and nations. I don't think Exxon is going to take the brunt of that. I will double check that. But assuming that they get hit in a proportional way, or maybe even in a less proportional way due to the fact that they have, I think, American mineries or oil refinery, whatever it's called, and other countries just don't have that. And I think most of the oil, the barrels per day, like sanction or cut or whatever you want to call it, most of that's coming from the Middle East and Europe. I think that's really it. Maybe a little bit of Asia, only because how you look at the map, the Middle East, some of it's more towards the Asia side, something like that. But that's pretty much where the cuts are coming. Middle East, Europe. So a company like Exxon, who I'm sure has equipment out there, I think they're more based in Europe, North America, and I don't know. But again, I'll double check that. That said, with those cuts, these companies are probably going to have an increased gross profit margin if that does actually become evident as the quarters go by and we get the financials. If that's actually becoming a reality, I think this blue even might be uh, low, but we'll see. We'll continue to track this. This is all new, so I'm sure this number will change over time, and eventually we'll find what we think is the actual number. But right now, where I stand, I think this is a decent spot. 130, or yeah, about 139. Which again, if you bought right now, we would get 22% return. The last one on my list, I'm kind of glad I'm doing this all of a sudden. That was a good catch. So Starbucks, this was fourth on my list. I feel like they can get up to this point, 113 again. They're currently at 104. That would be a 9% return by the end of the year. Some things that kind of caught my attention with this one is the fact that 113 isn't crazy, number one. It's hit that point many times and it's been rejected. Sooner or later, they're going to crack that line. But I just feel like by the end of the year, it's very likely, or at least it's not out of the question, that it would trade between this 108 and 113 number, these two red lines. We're just going with the 113 mark just because that seems to be a line where it hovers to a degree. And also, there's just so much time. There's so much time. I feel like that's 3/4 away. I think they'll continue to grow. We have a nice uptrend going on right here. If we wanted to get into this, just like we did with Exxon, if we drag this out to the end of the year, and we'll just pop this in here, a vertical line. At the end of the year, the intersection is at 129. I'm saying 113. I think 113's realistic, but I could easily see this one going over. I'm going to keep my point right now at 113, only because I think we're going to see another struggle over 113. We'll continue to watch them over the coming weeks and whatnot. Maybe some good news will happen, and we'll be like, oh, that's a little bit low in terms of that 113 figure. We could probably go a little bit higher. But yeah, that's the range. If we were to assume this uptrend stays intact, and we, for whatever reason, hit 129 by the end of the year, that'd be 24%. So high probability of improving, but for now, 113, I think that's a realistic line. So just to update this, the two companies that I'd be most interested in is Disney, mainly because historically I feel like they kind of deserve to be at a better value. Even with the rough spots they're going into, I think over time those rough patches, they'll go away and good times will come back. And then Exxon, because of just how popular oil is, and I think they have a chance to do something pretty good this year too, on top of last year. Unless taxes get increased or something that we haven't seen yet on the negative side happens, that would be the only reason. But those are my top two. So Disney and Exxon. Let me know your thoughts. Do you have different expectations for any of these, or do you think something else is a better buy today? Let me know in the comments. I'd be happy to read that. Other than that, please like, subscribe, and I'll see you on the next one. Bye.